Hello, I'm Carolyn Herbert from the Finance News Network, and joining me from global listed real estate manager Presima is portfolio manager Vincent Felteau. Vincent, welcome to Sydney.
Thanks for having me.
Now, Vincent, can you start by giving us an introduction to Presima?
So Presima is a Montreal boutique investment manager. We focus on listed real estate securities. So we build concentrated portfolio of REITs, if you wish, or real estate operating companies across the different markets, global markets. And our approach to this is really having a high concentrated approach. So portfolios of securities would typically the number of securities would typically be between 30 and 40 securities in our portfolio, with higher active share as well.
And for investors who are unfamiliar, why would they consider global REITs as part of a diversified portfolio?
Real estate, first of all, provide recurring income, and as people are thinking about their future and retirement, they need that recurring income that real estate is providing. The other thing which is important about our asset class is that if you think about the demand and supply dynamic, we are in an asset class where supply is relatively limited and it takes time to build real estate. The supply is inelastic. And on the demand side, if you think about the requirement for an aging population of recurring income, we've got large pension funds and insurance companies across the globe having an increasing need for income. And because interest rates are so low, we believe interest for real estate will continue to grow over time. And this is what we've seen in the last few years, an increasing allocation to real assets or alternatives where real estate is an important component.
And Vincent, where do you see opportunities in the global REIT market?
At the moment, we see opportunities in many different markets. We see opportunities here in Australia. We're super confident on the retail space. It's been a good sector for some time, and we continue to believe that this sector will perform well. In Japan, we see really good opportunities in certain stocks, particularly in developers at the moment. In the United States, we also see really good opportunities, listed companies owning high quality real estate, trading at valuation which is much below than people are willing to buy in the direct market. So in the United States, in this big market, we see a lot of opportunities at the moment. So basically, to sum it up, in all markets, we see good opportunities, and our approach, which is to have high concentration in what we like, there's always a good opportunity to invest. We have high active share, we deviate significantly from the benchmark, and this will help us over time to generate good performance for our clients.
And do you see any specific opportunities in the Australian REIT market?
At the moment, we continue to see the Australian REIT market as being really attractive. There's a lot of demand from foreign investors toward real estate in Australia. It's a tightly held market at the same time in terms of who owns the good real estate. And at the same time, the listed REITs are providing liquid access to those good properties that will generate good performance for the long term. So at the moment, we see retail as being our favorite sector in Australia, and we think it will generate good return for investors over time.
Finally, Vincent, given the mixed outlook for markets, how is the fund positioned, and do you expect that positioning to remain relatively stable for the rest of the year?
In terms of the positioning of the fund, a global real estate portfolio like the one that we manage is always diversified in many different markets. So we have some of our big positions in key cities in the United States. We have positions also that give you exposure to office in London, for instance, or key positions that will give you an access to high quality shopping malls in Australia. So over time, we feel that having a diversified portfolio in high quality real estate that's hardly constrained in the sense that the supply or new construction of those high quality properties is quite limited in most markets. And at the same time, we see increasing demand for real estate from large pension funds, insurance companies, as we see population aging over time. So in terms of our positioning, we continue to be in solid companies, have a good management team, good underlying assets, close to transit systems and infrastructure, and also properties that are environmentally friendly. So we think these features will bode well in terms of return for investors. So the positioning itself will change depending on the pricing, but the exposure that we provide will continue to be diversified across the different markets and across different asset classes.
Vincent Felteau, thanks for the update.
Thanks, it was a pleasure to be here.